All content provided by the rational investor is for educational and informational purposes only. It is based on academic principles in philosophy, psychology, and behavioral finance. We are not registered financial advisors. Nothing on this channel constitutes financial advice, investment recommendations, or an endorsement to buy or sell any security. Consult a qualified, registered financial professional before making any investment decisions. By watching our content, you agree to hold the rational investor harmless from any losses or damages resulting from your investment choices. If this approach to blending Stoic discipline with financial strategy resonates with you, I warmly invite you to join our community. Hit that subscribe button to get weekly documentaries that empower you to navigate markets with clarity and fortitude. For more on tackling cognitive biases, check out our playlist on Stoic investing principles, linked below. Let's keep building your portfolio strength together, one rational decision at a time.
Aurelius's principle against status quo bias, embracing necessary portfolio change.
Welcome to The Rational Investor, the definitive source for bridging ancient wisdom and modern financial management. We specialize in high-level financial psychology, systematically dissecting the cognitive biases that sabotage investment success, from loss aversion and confirmation bias to the anchoring effect. Each documentary links the timeless wisdom of Stoic philosophers like Marcus Aurelius, Seneca, and Epictetus with specific, actionable strategies in quantitative and behavioral finance. Our mission is to help you master your mind, master your market. This channel is for serious investors, executives, and financial professionals who understand that superior returns are generated not by predicting the market, but by controlling the mind. If you are ready to build a portfolio of philosophical and financial fortitude, hit subscribe and join a community dedicated to emotional discipline and sustained rational investing. New documentaries are published weekly. Today, we're diving into Aurelius's principle against status quo bias, embracing necessary portfolio change. Let me begin by drawing you into the opening hook, where we'll confront this pervasive bias that keeps you clinging to outdated investments and explore how Marcus Aurelius can guide you toward the change your portfolio truly needs. Have you ever held on to a lagging asset? Perhaps a once promising stock that's now underperforming, simply because altering your portfolio feels like an unnecessary upheaval, only to see compounding losses erode your long-term returns. This is status quo bias in action, our cognitive preference for maintaining the current state of affairs, even when evidence demands change, leading to inertia in decision-making. In behavioral finance, this bias exacts a significant toll. Vanguard's research reveals that investors reluctant to rebalance or divest underperform benchmarks by 1 to 2% annually as outdated allocations drift from optimal risk profiles amid shifting markets. But what if a time-tested philosophical principle could empower you to embrace necessary evolution? Aurelius, in his Meditations, advocates for rational adaptation to life's impermanence, urging us to align actions with reason over comfort. In this video, I promise you a systematic method to overcome status quo bias, integrating Aurelius's insights on change and reflection with precise financial strategies, enabling you to proactively reshape your portfolio for enduring success and resilience. Thank you for staying engaged. Now, let's dive into part 1, where I'm going to unpack status quo bias for you, revealing exactly how it locks your portfolio into outdated strategies and what's at stake if you don't break free.
I'm going to show you what status quo bias is and why it's holding your investments back.
Status quo bias, a cornerstone of behavioral finance, is our tendency to prefer the current state of affairs over change, even when evidence suggests that change would yield better outcomes. First identified by William Samuelson and Richard Zeckhauser in 1988, this bias stems from our brain's System 1 thinking, as described by Daniel Kahneman, the intuitive, effort-averse mode that favors familiarity and avoids the cognitive discomfort of decision-making. Why is this comforting? Sticking with the familiar, whether it's a stock you've held for years or an allocation strategy, feels safe, reducing the mental effort and perceived risk of altering course. But investing, this comfort comes at a steep price. In your portfolio, status quo bias manifests as inertia that sabotages returns. Perhaps you've clung to a legacy stock, like a former blue chip that's been underperforming for years, because selling feels like admitting a mistake or disrupting a comfortable routine. Or maybe you've avoided rebalancing your 60-40 stock-bond mix, despite shifting market conditions, because it's worked before. A 2021 Vanguard study found that failure to rebalance due to status quo bias led to a 1.5% annualized performance gap, as portfolios drifted into riskier or less efficient allocations. Similarly, during the 2008 financial crisis, investors who held on to declining financial stocks like Citigroup out of familiarity saw losses exceed 80%, while those who adapted to new data preserved capital. This bias is amplified by loss aversion, our fear of losses outweighing potential gains, and endowment effects, where we overvalue assets we already own. For example, you might hesitate to sell a tech stock inherited from a family portfolio, even if its fundamentals have deteriorated, because it feels like yours. Behavioral finance research, including a 2019 Journal of Financial Economics study, shows that status quo bias drives excessive loyalty to suboptimal funds, costing investors 1% to 2% annually in opportunity losses. By resisting change, you're not just preserving the status quo, you're actively undermining your wealth's potential in an ever-evolving market. Understanding this bias is your first step toward breaking its grip, setting the stage for Marcus Aurelius's wisdom to guide you toward necessary change. Let's now transition to part 2, where I'm going to connect Marcus Aurelius's profound insights directly to status quo bias, showing you how his philosophy can unlock the courage and clarity you need to embrace change in your portfolio.
Okay, well, now let me connect Marcus Aurelius's wisdom to help you overcome status quo bias and adapt your investments. Marcus Aurelius, the Stoic philosopher-emperor who ruled Rome from 161 to 180 AD, composed his Meditations as a series of personal reflections amid the chaos of war, plague, and political intrigue. Circumstances that demanded constant adaptation. While not written for investors, his principles speak volumes to status quo bias, that stubborn preference for the familiar which keeps you anchored to outdated portfolio strategies. At its psychological root, this bias arises from a fear of uncertainty and the discomfort of change. But Aurelius's philosophy of rational acceptance and deliberate action provides a direct counter, urging you to align your decisions with reason rather than inertia. Central to Aurelius's approach is the recognition of impermanence and the necessity of change. In Meditations, Book 4, 32, he writes, "All things are changing, and you yourself are constantly changing, and, in a sense, destroying yourself and the whole universe too."
This insight challenges the comfort of the status quo by reminding you that clinging to the present state, be it a stagnant bond allocation or a legacy holding, is an illusion in a dynamic world. For investors, this means viewing portfolio inertia not as stability, but as a form of self-sabotage. When markets evolve through interest rate shifts, technological disruptions, or economic cycles, your reluctance to rebalance echoes Aurelius's observation that resistance to change accelerates decay. By embracing impermanence, you can detach emotionally from what is and evaluate what should be, countering the bias's grip on familiarity. Aurelius also emphasizes rational reflection to guide adaptation. In Meditations, Book 6, 40, he advises, "Don't be whirled about, but in every movement have respect to justice, and on the occasion of every impression maintain the faculty of comprehension." This calls for pausing amid inertia to scrutinize your impressions objectively. Why are you holding this asset? Is it data-driven or habit? His daily journaling practice, where he dissected thoughts to align them with virtue and reason, serves as a model for investors to challenge status quo defaults. In behavioral terms, this activates System 2 thinking, overriding the automatic preference for no change that Kahneman links to decision fatigue. For you, this means regularly questioning portfolio stasis, much like Aurelius questioned his own reactions to external pressures, fostering a mindset where change isn't feared but seen as a rational response to evidence.
Furthermore, Aurelius's concept of prohieresis, the faculty of choice rooted in reason, empowers you to act decisively against bias. He notes in Meditations, Book 8, 32, "It is in your power to withdraw into yourself whenever you wish." Applied to investing, this withdrawal allows you to step back from the emotional endowment of current holdings and choose adaptation based on objective criteria, such as evolving risk tolerances or market fundamentals. This stoic detachment addresses the bias's emotional roots, like regret aversion, where fear of wrong changes paralyzes you. Historical parallels abound. Investors who adapted post-2008 by shifting from overexposed financials to diversified tech avoided prolonged losses, embodying Aurelius's adaptive resilience. By weaving Aurelius's principles into your thinking, you transform status quo bias from a barrier into an opportunity for growth, preparing you for the actionable steps ahead. Let's now proceed to Part 3, where I'm going to equip you with a clear, actionable framework drawn from Marcus Aurelius so you can actively challenge status quo bias and make the portfolio changes that drive real, long-term growth. Here's your 4-step framework to overcome status quo bias and embrace change in your portfolio. Drawing from Marcus Aurelius's emphasis on impermanence, rational reflection, and decisive action, I've developed a 4-step framework called the Aurelian Adaptation Protocol. This isn't a superficial exercise. It's a rigorous, repeatable process tailored for investors like you who demand discipline amid market flux. Each step is anchored in Aurelius's Meditations, designed to activate deliberate thinking and dismantle the inertia of status quo bias. Apply this quarterly or whenever market signals suggest your portfolio has drifted, and you'll cultivate the adaptability that separates enduring wealth builders from those trapped in complacency. Step 1. The Impermanence Inventory. First, confront the transient nature of your current holdings, mirroring Aurelius's observation in Meditations, Book 10, 34, that all is ephemeral, fame and the famous as well. Status quo bias lulls you into seeing your portfolio as fixed, but this step forces you to inventory its components with a lens of change,
highlighting where inertia has taken hold. Start by listing every major asset or allocation in your portfolio: stocks, bonds, sectors, or funds. For each, document its original rationale, e.g., bought for growth potential in 2015, alongside current performance metrics, trailing 1-year and 5-year returns, volatility, and alignment with your risk tolerance. Use tools like Portfolio Analyzer from Fidelity or Excel spreadsheets to compare against benchmarks, such as the S&P 500 or a custom index. Ask yourself, has the world changed since this position was established? For instance, if you're still heavy in traditional energy stocks amid the global shift to renewables, note how regulatory changes or tech advancements have eroded their edge. This inventory, taking 20 to 30 minutes, disrupts the bias by making the status quo feel less eternal and more vulnerable to obsolescence, echoing Aurelius's call to recognize flux as the norm. Investors who skipped this during the 2022 inflation surge clung to low-yield bonds, missing equity rebounds. Don't let familiarity blind you. Step 2. The reflection checkpoint. Aurelius was relentless in self-examination, advising in Meditations, Book 5:11. Dig within. There lies the wellspring of good. Ever dig, and it will ever flow. In this step, you'll create a checkpoint to reflect on your inventory, challenging the emotional attachments that fuel status quo bias and uncovering rational paths to change. Maintain a dedicated portfolio journal, digital or physical, and for each asset from Step 1, write a balanced assessment, pros of maintaining status quo, e.g. tax implications, familiarity, cons, e.g. opportunity cost of underperformance, and evidence for change, e.g. sector rotation data from Morningstar showing better alternatives. Quantify where possible. If a fund's expense ratio has crept up while returns lag, calculate the projected 10-year drag using compound interest formulas. Then, rate your resistance to change on a 1 to 10 scale, probing why. Is it fear of regret or genuine merit? Review historical decisions. How often has inertia cost you, like holding Kodak stock through digital disruption? This reflective process, done over 30 to 45 minutes, activates System 2 analysis, overriding the bias's preference for inaction. As Charlie Munger has noted, inversion thinking, considering what could go wrong by staying put, complements Aurelius here, helping you identify necessary shifts, such as diversifying from over-concentrated tech holdings post-2023 AI hype.
Step 3. The adaptation drill. Building on Aurelius's principle of reasoned choice, as in Meditations, Book 9:6, adapt yourself to the things among which your lot has been cast. This step drills you in simulating and planning changes, turning reflection into proactive scenarios to combat the paralysis of status quo. For assets flagged in your checkpoint, outline 3 adaptation options: minimal, e.g. trim 10% of a position, moderate, e.g. rebalance to a new asset class, and bold, e.g. full divestment and reinvestment. Use quantitative tools like Monte Carlo simulations via free platforms such as Portfolio Visualizer to model outcomes. Input variables like expected returns, correlations, and inflation to project portfolio impacts over 5 to 10 years. Factor in costs, transaction fees, taxes, e.g. capital gains at 15–20% for long-term holdings, and behavioral risks. For example, if status quo has you overweight in U.S. equities amid rising global tensions, simulate shifting 20% to international funds, drawing on data from MSCI indices showing cyclical outperformance.
assign probabilities, and stress test against black swans like recessions. This drill, lasting 45 to 60 minutes, embodies Aurelius's adaptive mindset, preparing you mentally for change and reducing the bias's friction. Hedge funds employ similar scenario planning to avoid the inertia that plagued retail investors in the 2018 volatility spike. Step 4. The commitment anchor. Finally, commit to action with anchors rooted in reason, as Aurelius instructs in Meditations, Book 12:14. Let your actions be guided by intelligence. This step solidifies your adaptations into enforceable rules, ensuring bias doesn't reclaim ground. Define binding anchors, preset criteria like rebalance if any asset deviates 5% from target allocation, or divest if 3-year returns trail benchmark by 2% after taxes. Document your chosen adaptations from the drill in a commitment contract. Sign it digitally or physically, and schedule implementation, e.g. via calendar alerts. Track progress with a scorecard. Log changes made, rationale, and outcomes quarterly. If resistance surges, revisit Aurelius' quotes on impermanence to reinforce resolve. Behavioral research from Schwab shows that such commitment devices boost adherence by 25%, closing the inertia gap. For you, this might mean finally exiting a sentimental family stock, reinvesting in diversified ETFs, yielding the 1 to 2% annual uplift Vanguard attributes to disciplined adaptation. Over time, this anchor builds meta habits, transforming status quo into a catalyst for continuous portfolio evolution. This Aurelian adaptation protocol requires stoic resolve, but it's your key to embracing change, ensuring your investments thrive in a world that never stands still. Now, let's tackle 5 highly relevant questions you might have about status quo bias and how Marcus Aurelius' principles can help you embrace the portfolio changes needed for success. I'll answer each one in a conversational, authoritative way, tying them directly to the video's theme of overcoming inertia to adapt wisely in your investing.
First question. What are some real-world examples of status quo bias hurting investors, and how do they connect to Aurelius's call for change? You're probably wondering how clinging to the familiar has cost investors in practice, especially since this video is all about Aurelius urging us to embrace necessary portfolio shifts. Status quo bias leads to costly mistakes by locking you into outdated strategies. Take the 2008 financial crisis. Many investors held on to bank stocks like Lehman Brothers, comforted by their long history as safe holdings, despite mounting evidence of subprime risks. Losses exceeded 90% for those who didn't adapt. Or consider the 2020-2022 bond market. As interest rates rose, investors who stuck with low-yield treasuries out of habit saw real returns eroded by inflation, missing equity rebounds. A 2022 Morningstar study shows that inertia in asset allocation costs investors 1 to 1.5% annually in suboptimal returns. This aligns with Aurelius's warning in Meditations that all is changing, urging you to let go of stagnant positions, like an overvalued sector from a decade ago, and realign with current realities. By recognizing these examples, you see the peril of inaction, reinforcing the video's push to adapt proactively for wealth preservation. Second question. How can I tell if status quo bias is influencing my investment decisions, and what Stoic tools from Aurelius can help me break free? As we explore Aurelius's antidote to status quo bias, you might be asking how to spot this inertia in yourself and use his wisdom to act. Signs include avoiding portfolio reviews because things are fine, or hesitating to sell a long-held stock, like a family-owned utility, despite its declining dividends. Another red flag, you're not rebalancing despite market shifts. Say your equity allocation ballooning to 80% in a bull run because change feels risky.
Behavioral studies indicate this inertia stems from loss aversion, costing 1 to 2% in annual returns. To break free, apply Aurelius's advice from Meditations, Book 5:11. Dig within. Use the reflection checkpoint from our framework. Journal why you're resisting change. Quantify opportunity costs, say a stock's 5-year underperformance, and challenge emotional attachments. This Stoic scrutiny, central to the video's theme, shifts you to System 2 thinking, empowering you to sell or rebalance based on data, not habit, ensuring your portfolio evolves with the market.
Third question. What research validates the impact of status quo bias on investment performance, and how does it support Aurelius's approach? You're likely curious about the evidence behind status quo bias, especially since this video ties Aurelius's principles to overcoming portfolio inertia. A 2018 study in the Journal of Financial Economics found that investors who resist reallocating assets due to familiarity underperform benchmarks by 1.2 to 2% annually, as portfolios drift from optimal risk-return profiles. Another paper from Behavioral Finance 2020 showed that status quo bias delays divestment from underperforming funds, with investors losing 1.5% yearly due to stickiness. Vanguard's 2023 analysis further quantifies the behavior gap, attributing 1 to 2% of annual underperformance to inaction during market shifts. These align with Aurelius's call in Meditations to adapt to change, as clinging to the status quo mirrors resisting life's flux. Our adaptation protocol, with its data-driven inventory and stress tests, mirrors these findings by forcing proactive adjustments, reinforcing the video's mission to help you close the performance gap through disciplined, Stoic-inspired action. Fourth question. How does status quo bias interact with other cognitive biases, and why does Aurelius's philosophy address this interplay effectively? This is a sharp question, as the video's focus on embracing change naturally leads to how status quo bias compounds other mental traps. It often pairs with loss aversion, where you avoid selling a losing stock to dodge the pain of realized losses, or endowment bias, where you overvalue holdings just because they're yours. A 2021 Journal of Behavioral Finance study notes that this combination leads to 1 to 2% lower returns due to delayed action. For example, during the 2022 crypto crash, investors clung to coins like Bitcoin out of familiarity and fear of loss, missing diversification opportunities. Aurelius's advice in Meditations, Book 8:32, to withdraw into yourself, tackles this interplay by urging you to reflect rationally, as in the reflection checkpoint, questioning emotional ties across biases. This holistic approach, central to the video, ensures you don't just address inertia, but also its allies, aligning your portfolio with reason over sentiment.
Fifth question. Why is Marcus Aurelius's philosophy particularly suited to overcoming status quo bias compared to other thinkers? And how does it tie to the video's theme? You might wonder why we're leaning on Aurelius to combat portfolio inertia, as the video emphasizes his principle for embracing change. Unlike Seneca's focus on fortune or Epictetus's on control, Aurelius's Meditations emphasize constant adaptation to life's impermanence, directly targeting status quo bias's root, resistance to change due to comfort in the familiar. His directive in Meditations, Book 4:32, to accept all things are changing, encourages you to see portfolio stasis, like holding a declining retail stock, as misaligned with reality. His journaling practice, reflected in our framework, provides a structured way to challenge inertia, unlike Plato's abstract ideals. Behavioral research supports this. Structured reflection boosts decision-making by 20% per a 2020 study, By following Aurelius, as this video advocates, you gain a tailored tool to embrace necessary portfolio shifts, ensuring your investments evolve with markets, not lag behind. Let's seal your commitment to adapting your portfolio with Aurelius's guidance. We've unraveled status quo bias, the cognitive tendency to cling to familiar investments even when evidence demands change, costing investors 1 to 2% annually in returns, as Vanguard and other studies confirm. From holding on to declining stocks during the 2008 crisis to resisting rebalancing amid 2022's inflation surge, this inertia erodes wealth by anchoring you to outdated strategies. Yet Marcus Aurelius's Meditations offers a powerful antidote. By embracing impermanence, reflecting rationally, and acting with reasoned choice, you can break free from the comfort of the familiar. The Aurelian Adaptation Protocol, your impermanence inventory, reflection checkpoint, adaptation drill, and commitment anchor, translates this Stoic clarity into a disciplined system, ensuring your portfolio evolves with market realities rather than stagnating in the past. This is the core of the rational investor's mission, mastering your mind to master your market. As Aurelius reminds us in Meditations, Book 7, 29, wipe out imagination, check desire, extinguish appetite, keep the ruling faculty in its own power. By applying this framework, you'll not only overcome status quo bias, but also build a resilient and adaptive approach to wealth creation that thrives in uncertainty.
All content provided by the rational investor is for educational and informational purposes only. It is based on academic principles in philosophy, psychology, and behavioral finance. We are not registered financial advisors. Nothing on this channel constitutes financial advice, investment recommendations, or an endorsement to buy or sell any security. Consult a qualified, registered financial professional before making any investment decisions. By watching our content, you agree to hold the rational investor harmless from any losses or damages resulting from your investment choices. If this approach to blending Stoic discipline with financial strategy resonates with you, I warmly invite you to join our community. Hit that subscribe button to get weekly documentaries that empower you to navigate markets with clarity and fortitude. For more on tackling cognitive biases, check out our playlist on Stoic investing principles, linked below. Let's keep building your portfolio strength together, one rational decision at a time. All content provided by the rational investor is for educational and informational purposes only. It is based on academic principles in philosophy, psychology, and behavioral finance. We are not registered financial advisors. Nothing on this channel constitutes financial advice, investment recommendations, or an endorsement to buy or sell any security. Consult a qualified, registered financial professional before making any investment decisions. By watching our content, you agree to hold the rational investor harmless from any losses or damages resulting from your investment choices. If this approach to blending Stoic discipline with financial strategy resonates with you, I warmly invite you to join our community. Hit that subscribe button to get weekly documentaries that empower you to navigate markets with clarity and fortitude. For more on tackling cognitive biases, check out our playlist on Stoic investing principles, linked below. Let's keep building your portfolio strength together, one rational decision at a time.